Dubai and the UAE now have a 15% tax rate. This is not clickbait. This is not me lying. This is not me speculating. No, there is a new domestic minimum top-up tax for 15%. Now, this doesn't apply to everybody. So if you start a free zone company in the UAE, or you start a mainland company because you want to start a car rental, or you want to do your consulting business online, this 15% tax might not apply to you. The one that does apply to you is a 9% tax on profits over 100,000 US dollars. This 15% tax applies to companies that are making global revenues of over 750 million US dollars. Now you might think, okay, 750 million is serious money. We're talking about billion-dollar companies. Those are the ones that are going to pay this 15% tax rate. Now you might think, why is Dubai, why is the UAE launching these new tax rates? Why 15% if it was 9% before? It's to align with the OECD. And this was always the plan of the OECD, of these Western countries, of the European Union, of the US, is to bully the UAE into launching some sort of corporate tax, into launching some sort of taxes, because we can't have such a popular, great place, developed place that millionaires are moving to with zero taxes. We're going to let you keep your personal income tax at zero. We're going to let you keep your capital gains tax at zero, but not your corporate tax. All these companies that are moving to the UAE need to pay some sort of tax. And now companies that are making 750 million US dollars in revenue or more will need to pay that 15% tax on their profits. Now, on the official launch of this tax, it says companies can claim a refundable tax credit on the salaries of senior executives and key personnel involved in critical business functions that drive economic value in the UAE. But obviously, any salaries or any dividends or any payouts that you make to your employees is deducted as an expense. So that wouldn't pay tax anyway. And the 15% tax is on profits, even though it's calculated, or even though it applies to companies with 750 million in revenue. Now, what everybody's saying is that this 15% tax, just like the VAT, just like the 9% tax, just like every single tax in the UAE, might apply to smaller companies. Sure, it starts out with 750 million, but then it goes down to 250 million. And then it goes down to 80 million or 75 million. Now we're getting into territory that a lot of our clients find themselves in. They make $10 million a month, $100 million a year, and now they have to pay this 15% tax. And then from 75 million, let's say, it goes down to 7.5 million. Now we're getting into territory, into very common territory for a lot of consulting companies. Some YouTubers, traders make this amount of money. So if you do some FX trading or crypto trading, if you do high frequency trading, that could be considered company income. Because even though, yes, you're making capital gains, yes, you're making personal income, if you're doing it at a high frequency, and especially if you're doing it with a team, that could then be considered corporate income. And if it goes down to that level where it's to, let's say, 7.5 million per year instead of 750 million, now it applies to a lot more people. And then some people are saying, oh, it's just going to apply to everyone. They started at zero. They went up to 9%. They said, oh, free zone companies are not included in this 9% tax. And then they added free zone companies and they added everybody, regardless of your activity. And then from 9%, it's going to go up to 15% for absolutely everybody. And then there are better countries to go to. Now, I don't think this is going to happen over the next couple of 2 to 3 years. So for now, you're safe with the 9% corporate tax. It's obviously lower than many other countries. And you have to be very careful because there are people saying, oh, just pay it all out in salaries. Pay it all out in dividends. So if you make, let's say, $10 million per year, just pay yourself $9 million in salary because there's no personal income tax. Now, if you're a US citizen, you need to be careful because you need to pay taxes back to the IRS. So let's say you're Canadian or Australian or German or whatever. You make 10 million and then you pay out yourself 9 million in dividends and salaries. That will not be accepted by the federal tax authority of the UAE. They are not going to accept a $9 million salary for a company that makes 10 million. It has to be on par with the salaries in the current market. So if your company makes $10 million per year, you need to look at other companies that make $10 million per year and see what the salaries of the CEO, COO, CMO are, and you'll see that they're around $250,000, $350,000. So you can't just pay yourself out $9 million in salaries and dividends. You need to pay out yourself what is on the current market. So you pay yourself out $350K. That doesn't pay corporate taxes because that's personal income as long as you're a tax resident of the UAE. And obviously you can make some expenses. You can buy cars, you can buy an office, you can buy a YouTube studio, whatever you want. And that would be deductible from your revenues, from your $10 million per year. But you can't just go and deduct absolutely everything. You can't just pay it all out or add your cousin or your brother into your free zone company and then start paying it all out. You have to keep up with the current market rate for the salary for that position, because I've seen some people add their girlfriend as an assistant and then pay out their girlfriend $1 million and then send it back to themselves. That would be considered tax evasion or tax fraud. And in the UAE, you want to be extremely careful with this. The UAE wants to remain extremely attractive to millionaires around the world and large companies while not being blacklisted, not being gray listed, and also being in great relationships with the US, with the European Union, with the OECD, with all these countries that want higher and higher tax rates and tax the rich and more inheritance taxes. So for now, we won't see this 15% tax go down towards companies that make less than 750 million, but maybe in the future you will see from 750 million it goes down to 75 million, then it goes down to 7.5 million. So always have a plan B to your plan B. Always have a plan C to your plan B. Maybe your plan B is the UAE. You have a company, you move to the UAE, you leave behind your extremely high tax country. Now you're paying 9%, it goes up to 15%. You also have another company or another residency permit. You get a second citizenship just in case, in order to have a couple more countries around the world that you can go to. So always have multiple plans in case rules change, because they're constantly changing, especially for places that are so attractive. In 2024, more millionaires moved to the UAE than any other country around the world. So it's definitely the hub that's attracting wealth from all over the world. Obviously, it's going to be under the microscope of these high-tax countries. They want to bully them to add more taxes because they're so popular. If you're interested in moving to the UAE to lower your taxes legally, or just to get better networking or more freedom, and you want to open up a company in the UAE, you definitely want to watch this video right here on Dubai and UAE banking. All the mistakes that you can make as a new UAE resident or as a veteran resident. I go through every single banking option, the best banks that hundreds of our clients use, that I personally use, and the worst banks in the UAE that could freeze your bank account, that you could have problems with. Definitely check out this video right here. You don't want to miss it.